$150,000. That is the amount of capital that I was able to add to my futures portfolio after passing another challenge. Many people are struggling to pass challenges these days, but with this video I'm going to help you out. I'm going to give you my entire model to get you towards that funded stage. But for now, let's hop right into the video. For this model, we are going to trade on an intraday basis, and when we are going to do that, you want to focus yourself on getting into the distribution or the expansion of a 4-hour candle. And that is also immediately where the timing of our trades are going to be in, because we are going to focus ourselves on the ICT silver bullet. And the ICT silver bullet for the AM session is at 10 AM and for the PM session it is at 2 PM. But you might question yourself, why are these specific time frames the ICT silver bullet window? Well, keep in mind what I said at the beginning of the video. We want to catch an expansion or distribution of a 4-hour candle. At 10 AM and at 2 PM, a new 4-hour candle starts, and we want to play into that distribution or expansion. Now that we know on which times we should focus ourselves on the charts, I want to visualize a little bit more how the distribution or the expansion of a candle works. Because you might have heard of the power of 3 or the open, high, low and close principle of a candle. Most people are always talking about the daily or the weekly expansion in the form of an open, high, low and close. However, price is fractal, so this could also be applied on the 4-hour candle. On this visualization right over here, we can see that we have the 10 AM open, price manipulates higher, it creates a high, it distributes lower, it creates a low, and eventually we get to a close of the 4-hour candle. And when we compare the schematic to this candle right over here, we can see that this is how the 4-hour candle develops in the end. Because we can see that the body of the candle opens up right over here. We manipulate higher, creating the top of the wick of the 4-hour candle. We distribute lower, creating the low, and this is the lowest wick of the candle. Eventually, we close up higher, closing up of the body of the candle. And the goal is for this model is to get into a distribution, for example, where we manipulate higher, and we want to position ourselves at the top of the 4-hour candle if we are going to think that price is going to distribute lower. And this is the move that we want to get. And now going over the bullish scenario, you can see that it is the exact opposite from the bearish one. For the bearish one, you would like to see an open, high, low and close. And for the bullish scenario, you want to see an open, low, high and close. Now going over the schematic, you can see that we have the 10 AM open right over here. We manipulate lower, create the lowest low of the candle. Eventually we expand higher, creating the high of the 4-hour candle, and eventually we are going to close off the body. The principle for the PM session is of course the exact same way as for the AM session. So now going over the open, high, low, close of the candle, we can see that this is the 2 PM open. Price manipulates higher, it creates a high, and that is also the high of the wick of the candle. We distribute lower, creating the body of the candle, creating the low of the candle at this wick right over here. Eventually we retrace a little bit higher, closing of the body of the candle. And now last but not least, the bullish scenario for the 2 PM candle. We are opening up, we are manipulating down, creating the low of the candle. This is the expansion that we want to position ourselves in. We create the high of the candle right over here, and eventually we are going to retrace and close off the body of the candle. And now we are going over the trade requirements of the model itself. First up, narrative. Are we in an AMD? Are we in a market maker model? Creating the correct narrative is extremely important in your general trading. Because if you are not able to apply the correct narrative to your charts, you are basically trading a pattern, and that is not something that you want, because you want to always be in line with bias and the correct narrative. So make sure that you know how to create that correct bias. Next up, you want to trade from a high time frame PD array or after a key liquidity rate. You want to implement SMT. However, this is optional. It is a very strong point to add in your trading rules. However, it can happen sometimes that we are not able to find that SMT, but that the trade is still valid. So that one is optional, but it is a good one. Next up, you want to see a time-based swing point. You want to enter off of a breaker, and you want to have a target of a minimum of 10 handles. For the model itself, we want to see a time-based swing point because we want to play in on that expansion or distribution in the AM or in the PM session. But what do we want to see on the chart occur then? You want to see a swing point being created on the 1 hour time frame, and these are the candles you should focus yourself on and what you want to see. For the AM session, you want to see that the 8 AM candle is closing up, and for a bullish scenario, you want to see that the 9 AM candle is going to trade lower, taking out 8 AM candles low. However, afterwards you want to see that this candle is going to close inside of the 8 AM candles range. Afterwards, during the 10 AM candle, you want to see that we are going to manipulate down and expand higher afterwards. For the bearish scenario, it is exactly the other way around. The 8 AM candle closes up. You want to see a rate on the high of the 8 AM candle during the 9 AM candle, and you want to see it close back inside of the range again. During the 10 AM open, you want to see a manipulation move higher, creating that upper wick to see a distribution lower afterwards. For the PM session, it works in the exact same way. However, you want to focus yourself on the 1 PM, 2 PM, and 3 PM candle, where the 3 PM candle is going to give you that expansion or distribution. And now going over the execution, we want to base our trades on this breaker entry model, where we want to see the following occur. For the bullish scenario, you want to see that a SIBI is going to hold the breaker down before it is getting created. This makes it even higher probable. Afterwards, when the breaker has been created, we want to get in on a retest of that breaker. However, sometimes the price does not give you that retest, so it is a little bit more risky, but you could also immediately enter when we have a break above that breaker itself. In regards to the SL placement, you can use it underneath the breaker itself, or if you want to be a little bit more risk averse, you can place it underneath the low as well. And now for the bearish formation, you want to see the following occur. Before that the breaker is being created, you want to see that price holds a BISI as support. We want to see that push higher and lower to create that breaker overall. Again, you can enter right after the breaker has been created, or you can wait for a retest and go in over here. When it comes to SL placement, you want to place it above the breaker, or again, if you want to take less risk, you are going to put it above the high itself. So now let's go over some examples, and we will be starting off with creating a narrative on the NQ daily chart. As you can see on the daily time frame, we are clearly in bullish order flow. Price is trending strongly up higher, and that we are using bullish discounted PD arrays as support to push price higher. So overall, we can just say that price is bullish overall. When we zoom in a little bit more to the 4-hour time frame, a little bit more of the recent price action, we can see that we are trading off of a key level in the form of this 4-hour order block before we are getting that expansion higher. And now zooming in on the 1-hour time frame, we are going to focus ourselves on these three candles. And now with the theory that has been learned in this video, you need to see something that is noticeable. And this is the thing that you should have noticed. This is the 8 a.m. candle, and during the 9 a.m. candle, we can see that we have manipulated down into that 4-hour order block. After that 4-hour order block has been hit, we can see that we are trading back aggressively higher, closing inside of the range. The entire narrative was bullish, so now we want to see that manipulation occur during the 10 a.m. candle so that we can play in on the expansion later on. And now we are zooming in on the 1 minute time frame, and we are here having is the 10 a.m. open, and after the 10 a.m. open we drop down into that breaker with that FEG combination. After that the FEG has been hit, we can see that we got that minimal 10 handle move with the correct SL placement in order. In the second example, we are going to cover the ES 1-hour chart. But before I'm going to annotate it myself, I would like to give you the opportunity to see what is happening on the chart itself. First off, we can see that we have a move higher, hitting a 1-hour high time frame PD array in the form of this mitigation block on the left hand side of your screen. And besides that we have hit that 1-hour mitigation block, we can also see that we have a double purge on the 1-hour time frame. We had a run on sell stops, and after the run on sell stops we have a run on buy stops. And when a scenario like this occurs, when the sell stops has been taken out first and the buy stops has been taken out second, we can expect a low resistance liquidity run towards this low. So the bearish bias has been established overall. But did we create that swing point? And yes, we did, because we can see that we have created this 8 a.m. candle, and that during that 9 a.m. candle we have that run into that high time frame PD array, and after that high time frame PD array has been hit, we can see that we are closing back inside of that 8 a.m. candles range. So this means that we want to see that manipulation move higher on the 10 a.m. candle to see a distribution lower afterwards. And now zooming in again on the 1 minute time frame, we can see that we have a run into that breaker formation right at the 10 a.m. open, and that we get that distribution lower and that minimal target of 10 handles. In the third example, we are going to cover the PM session for an NQ trade. But first off, before I'm going to annotate the chart myself, I would like to give you the opportunity again to do it yourself to see if you are on the right path. The first thing that you should see on the 4-hour time frame is that we have hit a high time frame key level in the form of a 4-hour fair value gap. And zooming in on the 1-hour time frame, we can see that we have a clear narrative going on, where price was clearly accumulating right over here. It manipulated down into that 4-hour fair value gap, this being the manipulation move, and we want to see that distribution move higher. So the bias is bullish in this case with an AMD formation that has been established. But how did the 3 candle formation form? Well, this is the 1 p.m. candle, and with the 2 p.m. candle, we can see that we have a run on the low of the 1 p.m. candle and that we close back inside of the range. So we can anticipate an expansion during the 3 p.m. candle. You should know that it doesn't matter that we see another run on the low right over here. You still want to get into a position higher if the remainder is still validated. And now zooming in again on that 1 minute time frame, we can see that we have created that breaker right over here in combination with that fair value gap. However, this is an example where you should have entered right after the break has been occurred of the breaker, because we do not get a solid retest, but we do get a very nice expansion higher, completing our targets. And now let's go over the last example, which is a bearish scenario in regards to the PM session on NQ. First off, we can see that on the 4-hour time frame that we are trading downwards and that we have seen a retracement back into premium, hitting an internal range liquidity pool in the form of a 4-hour fair value gap. With the trend being lower and hitting an internal range liquidity pool, I would like for price to seek an external range liquidity in the form of an old low. So for me, my bias has been bearish overall in this structure. Zooming in on the 1-hour time frame, we can see that we have that push higher right over here into the 4-hour fair value gap. With the run higher, we can see also that we have a run on buy stops, and that makes this a high probability order block. We trade back higher into it, we are rejecting the order block, and we can see that price is returning back lower. And for our model, yes, we did create that swing point. This is the 1 p.m. candle, and with the run higher during the 2 p.m. candle into the high probability order block, we can see that we have a rejection and that we are closing back inside of the 1 p.m. candle's range. So now we can expect or anticipate a distribution lower during the 3 p.m. candle. And last but not least, zooming in on the 1 minute time frame, we can see that after the 3 p.m. open, we have a manipulation move higher, getting into this breaker formation. You will probably think that, but hey, this is not a breaker with the current setup that has been occurred. It's not entirely correct, because we have an SMT being formed at the high with ES, and that is also why this is still a valid breaker. We hit the breaker after the 3 p.m. opening price, and we see the distribution lower afterwards. And that brings us to the end of the video. If you liked the video, I would highly appreciate it if you smash that like button, and if you want to see more in the future, make sure to subscribe. But for now, I'm just going to wish you a very nice rest of your day, and I'll see you next time. Bye bye.